Pramod Amthe, Head of Research at InCred Securities, is here with us to discuss a very interesting report with a long list of stocks which look good. Pramod, I was just looking at your ad list and some of the names which stood out. Let's start with the Spandana Spurti financials. In fact, just today, the CIBIL and SIDBI together have come out with a report saying how microfinance, MSME, that section of lenders are doing phenomenally well, and it was reflected in Q4 results as well. One of the name figures there. Why is it you like this stock and this category which is doing well? What is your take?
So broadly, if you look at financials, on the top down, we are positive on NBFCs and also on the MFI. In which space we like both the Home First Finance and the Spandana in that segment, where broadly we feel that the NIM expansion trend is possible in this segment, coupled with a strong growth in the lending book. So that's the broader macro which we are trying to play through these two names.
I see a recent addition that you have made to the list is KEI Industries as well. Could you talk to me about what's the thesis there? Because the stock had run up quite a bit and the valuations people were saying are getting a bit challenging.
So in that space of broadly the electrical cables, we are more preferred for KE, where our analyst has done an upgrade, is on the broader macro theme of infra spend leading to the consumption of the cables and wires that continues to favor us. And relative basis, KE has done underperformed the peers, and considering the way the results have come through, which were marginally disappointing, but we feel that catch up will happen in the coming months as the momentum builds up in the second half from the government capex, along with the favorable margin trend, which leads to us reiterate it as one of the high conviction ideas in the space.
And what about global spirits? Because I think post the listing of Sula, there's a renewed interest when it comes to the entire Alcobev industry as well. And I think most of the stocks have actually done quite well. What's the rationale of preferring, let's say, global spirits versus a Soam or a United or even other names?
We do cover other names. The preference for Globus is relatively stable. Soam has run up substantially, even though we like them, and the expansion there is pretty aggressive in terms of the volume dispatches. The global is more a combination of both the liquor business and also on the ethanol space. It's a combination of the same, and that's the preferred liking as the blending for ethanol continues to improve, and we feel this is one of the beneficiaries in the space.
So that's the thesis as far as Globus is concerned. Yes, Soam has run up quite a bit, in fact, in the last 6 to 8 months itself. But I also wanted to understand from you, what's the view on Bharat Forge? Because this time post the earnings, we have seen quite a few upgrades come by. Street has become a lot more constructive on that entire turnaround story. What kind of upside do you see on this one? Could it be one of those multi-baggers, outperformers?
I think the concerns of the on the automotive space, especially from the global exports, we feel is well factored in. The interesting turning point for this quarter for Bharat Forge was the industrial segment. The long gestation segments like aerospace and the defense are now getting realized into sales or the top line. And clearly management is demonstrating that these businesses are not only lumpy to add up to sales, they are also margin accretive. And the order wins in this space clearly give a visibility for a quarter-on-quarter improvement in the industrial space. And hence, with the worst of the global autos being factored in the current business and the ramp up in the industrial coming through, should be a re-rating catalyst. So we recently upgraded the target price, and we clearly see an upside of more than 20% in the stock in the year going ahead.
20% upside seen on Bharat Forge, but what's your view on Concord? Because the earnings were dismal this time around. The volumes really failed to pick up. There's this entire overhang of divestment as well. What keeps it in the high conviction ad list?
So you are right. The results were relatively disappointing as there was some amount of traffic disruption which happened in the quarter, both in terms of the export side and the some amount of movement at the port level. Having said that, we continue to feel that as the DFC continues to come through, Concord will be one of the major beneficiaries on the volume momentum and also the efficiency coming through in the system because of the double stacking. So structurally, we remain positive, even though we factor in the weaker first quarter results into the numbers.
And you have a reduce now on Interglobe Aviation. Recently, we have seen very good commentary. Of course, the earnings were stellar to say the least as far as Interglobe Aviation is concerned. Do you think the best is behind? Valuation is pricing in the positives already? Is that the reason why you have a high conviction reduce?
So other than those factors, what we feel is that the market share benefit which has happened for the incumbents because one of the competitors uh, going belly up is not a sustainable phenomena if you have to look back historically, either the case of Jet or other competitors. And hence, it's a more of a short-term margin recovery or market share recovery coming through. We are already seeing some of the oil prices moving up, and hence pricing that into the earnings is going to be a challenging. So this difficulty to sustain this market share coupled with the cost pressures coming through is where we feel that the run up is not justified, and we hence have a non-consensus reduced rating on Indigo.
So that's a consensus reduce coming in on Indigo. But Mr. Amthe, on that note, we let you go. Thank you so much for making time and speaking with ET now. So that's the
Thank
high
you.
conviction add and reduce list coming in from InCred. But for now, the market is holding on okay.